One of the other things I definitely think we should make mention of today is that I see an increase of self-employed now post-COVID.
Yeah.
I'm calling it post-COVID.
Yes, it's done.
It's done. Yes,
it's done. Into existence.
Yes, it's done. So with that being said, Jennifer, there's a lot of self-employed borrowers out there. And we talk about building that yay team. They go to their CPA or financial advisors, and they get communication and information on how to do their tax returns this way. And then they do their tax returns this way. And then they come to the mortgage lender and they say, hey, look, here are my tax returns. And here's all my financial information. And I want to qualify for this house. And the lender says, oh, you don't really have an income here. And they go like, well, I did. I made this much, but you wrote off this much. And well, this is what in my communications with my CPA that is best for my business. Great. And again, where you spoke a minute ago about not everyone on that team always having the same answer because they were different perspectives. Now me or us in the lender world, I'm not just speaking of me right now in SecurityNational Mortgage. I'm speaking of loan officers across the United States. We then are placed into a situation where we go like, uh-oh, your tax returns don't show enough income for you to qualify to buy this house.
Yeah.
Now, depending upon who that bank or mortgage company is, they may not have an answer. So if they were talking to us, we have an answer. We have a bank statement loan for self-employed borrowers where they provide 12 to 24 months of bank statements. We analyze those very carefully, and we come up that based upon business deposits, we put together an income average. Voila.
Voila.
It works.
It works.
And we have documented paperwork, whereas years ago, you didn't have that. And so here we now have a bank statement program where we have 12 to 24 months of their business bank statements, whether they're a sole proprietor, a partnership, an LLC, or a corporation, and we evaluate those business deposits over that 12 to 24 month period, come up with a monthly income. We make sure that their credit score is also in line with the credit qualifications for that program, and we can then provide them a loan. And guess what? They don't have to go back to their CPA and try to figure out how to change those tax returns, because if that's the kind of business they're running and they're meeting the IRS codes, they've got to make a decision. Do I want to purchase this home under this bank statement program, or do I? No. Again, presenting them with all the options gives them an educated ability to make a decision.